and that includes the stock of the day. This is one that my friend Howard, I know, used to have as a bottom of the drawer stock. We'll get an update today. It's really interesting because Woolworths has cut its full year guidance, pointing to incremental fuel costs from the Middle East conflict and investments to support customer budgets during rising inflation. So the downgrade comes as third quarter sales topped $18 billion, up 4.5% year on year for the grocery division. Food sales grew nearly 6%. E-commerce sales reached $2.7 billion, up more than 20%. Steaks market analyst Kylie Purcell saying this growth is being driven by volume, not by price. Consumers are apparently buying more items per basket, engaging with more promotions, and leaning heavily into loyalty programs. Meanwhile, Woolworths says that New Zealand food earnings are expected to be below the prior half year. So, accordingly, the market is voting with its feet and shares today. One of the worst performers by percentage change. Do we not have the share price? All right, it is off by, let me get the update, close to 7%. Trading at $34.77. All right, let's get a view from my guests. Howard.
Yeah.
Now, I am going back at probably a decade or so,
Yeah,
but you used to love Woolworths.
Absolutely.
What about now?
Well, look, there were two very good reasons for loving it at the time. The one was we'd just come out of the GFC, and it was the kind of business that, despite the GFC and high unemployment and people worried about their futures, they were still going to go and shop in Woolworths. They may not go and buy a new car, they may not go and buy new furniture, they may not spend on other things, but they were certainly going to spend on food and groceries. The second thing is, at the time, they had margins that were around about close to 2% net profit margins. Now, those have shrunk and shrunk and shrunk, and now we've got every politician under the sun talking about everything gouging. You know, we've got the banks gouging people, even though bank margins have dropped. We've got the supermarkets gouging people, even though the margins in supermarkets have dropped. We've got insurance companies gouging everybody, even though insurance company margins have dropped. It's become the fashion for politicians to buy votes by accusing anybody under the sun of gouging without actually looking at the actual results. I mean, if you look at bank net interest margins, they've plunged in the nearly 40 years I've lived in Australia. Insurance margins have plunged, supermarket margins have plunged, but suddenly we're accusing them of gouging. So for them to be a wealth winner today, we would need politicians to get brain transplants, and I don't think that's terribly likely to happen. So unfortunately, Woolworths would be terrific business to keep owning if you're protecting yourself against a major collapse in the market. But it's not going to be a wealth winner in terms of growing nicely in the near future, which at that stage, going back 15 years, was.
Mm-hmm. So if you were in it for the right reasons or for particular reasons, you might hold on to it.
You know, if you're a huge optimist and you think stock markets are going to rise enormously, I wouldn't hold on to it. I'd put the money somewhere that it'd grow. But if you believe, as I and most of our Teaminvest members do, that there's a lot of worries out there and things that could go wrong. That doesn't mean we're saying markets will collapse, but it's certainly possible. Then Woolworths is a pretty safe place to have your money.
Got it. Thank you. So it's an interesting one, isn't it? Because we had headlines yesterday saying that even Aldi is finding it a bit tough as these, price wars continue. But the consensus was that Woolworths and Coles were going to do really well in an inflationary environment. But, I guess they've realized that those margins are going to have to continue to shrink because, in fairness, the margins of Australian supermarkets were way higher back then than the rest of the world.
Oh,
so
absolutely.
That was not, I'm kind of glad the margins have come down. Not as an investor necessarily. What do you think, Kai?
Yeah, no, I completely agree with Howard in terms of we're seeing basically a lot of politicization. We're coming into a high inflationary environment. So there's a lot of cost pressure. I mean, the cost of fuel in terms of logistics, delivering stock to the shelves for Woolworths, that's a big cost increase. But the issue is if they try to increase the price too much, they'll attract attention, and basically there'll be a whole uproar in terms of them trying to price gouge. So, I think it's getting harder and harder for both Coles and Woolworths to really keep up with that inflation, especially if we go into a high inflation environment. Already yesterday the figures came out and it didn't look very good. Although it was below expectations, it was still a fairly inflationary figure. So I think there will be more cost pressures to come and flow through from the Middle East crisis. So for me, it's not. I'm not really looking at Woolworths at the moment. It's not a stock that excites me a lot.
And with our $1 trillion in debt that we have in Australia, we've got to pay somewhere around 4% and a bit on that. We're going to have inflation or low growth or both, hopefully only one of the two, not both, for quite a while.
Mm-hmm. Okay, so you'd hold Woolworths?
No, I'll sell it.
You'd sell it, okay, got it. Thank you. All right, so that's the stock of the day in relation to the news. Sometimes there's news that pops up with the stocks that you've picked, sometimes not.